Welcome back, everyone, to another explainer. Okay, if you're ready to finally transform from, an emotional guesser into a structured professional trader, well, you're exactly where you need to be. I am absolutely thrilled to guide you through this explainer today because we're unpacking a framework that is literally going to shift how you view the markets. We're going to strip away all that noise, look at real hard data, and give you the professional's blueprint for mastering order flow. But right out of the gate, I want to ask you a question directly. We all know the grim stat. Roughly 90% of day traders fail. So, what do you think is the biggest reason behind that massive failure rate? Take a second. Really think about it. Is it just a lack of discipline, terrible risk management, or is it simply that folks are operating with zero structure and just letting emotional trading hijack their accounts? Honestly, most of the time, it's a toxic mix of all the above, and that's exactly the problem we're solving today. So here's our roadmap for today. First, why most traders fail. Second, reading the market's true story. Third, checking out some real market chart evidence. Fourth, surviving with risk management. And finally, the LeoFinWise approach. Let's get to it. Starting us off with section 1, why most traders fail. The contrast between the amateur mindset and the professional reality is stark. The amateur approach? Total chaos. It relies super heavily on visual hype, just buying because the candles are flashing green. It's basically a guessing game driven entirely by FOMO, the fear of missing out. The professional approach, on the other hand, is a whole different ballgame. Professionals execute trades because the actual story behind the move is crystal clear. They aren't just reacting to pretty colors, hard structural evidence. So how exactly do we find that structural evidence? Well, that brings us right to section 2. They are reacting to hard structural evidence. So how exactly do we find that structural evidence? Well, that brings us right to section 2, reading the market story. Think of this kind of like building a house. To read the market effectively, you absolutely need a layered foundation. And pros rely on a very specific combo of tools to do this. Step 1 is using CPR for your foundation. This gives us our big picture overarching market structure. Then step 2 brings in the standard pivot, which defines our core support and resistance zones, so we know exactly where the battle lines are drawn. And step 3 adds the Camarilla pivot. This one is fantastic for zeroing in on specific reversal and breakout zones. Together, these 3 elements create an incredibly strong framework, so you can finally stop guessing where price might turn. Okay, let's dive into this next concept because this right here is the secret sauce. Once you've got your structure mapped out with your pivots, you need confirmation. Order flow is essentially your X-ray vision. It actually looks inside the candles to reveal whether buyers or sellers are truly active at those key structural zones. It basically tells you if the actual intent in the market matches the location. Game changer, right? Now, theory is great and all, but let's see what this actually means in practice. Moving on to section 3, real market chart evidence. Take a look at the precise data blocks highlighted on this real Nifty order flow chart. And just to be clear, we aren't using random made-up visuals here. This is real market education. Observe how Nifty traded down into those major demand zones. See, without order flow, an amateur just sees a sea of red candles and immediately panics. But by looking at the actual data inside those candles, we can clearly see buyers stepping up and actively defending those lower levels right against the structural pivots. And this brilliantly illustrates what was really happening beneath the surface. We had a really strong demand zone, and right at that pivot support, we witnessed massive buyer absorption. Sure, aggressive selling was coming in, but it was getting entirely eaten up by institutional limit orders. This was not some random bounce. It was smart money accumulation that perfectly set the stage for a powerful late-day recovery. Traders who understood this structural context, they stayed completely confident, cool as a cucumber, while everyone else was just getting chopped up. Let's move to and see how this builds using another great example. Here we have a real Bank Nifty order flow chart. Notice the specific reaction right at the S2 support and those key pivot areas. Once again, we're not just staring at the shape of the candle hoping for the best. We are reading the actual market participation right at a critical structural boundary. As price hit that S2 support, the order flow revealed something absolutely crucial. Seller exhaustion. The selling pressure literally just ran out of ammunition. And simultaneously, we saw buyer participation ramping up because professionals could read this exact combo: support holding plus buyers getting aggressive. They had the rock-solid confidence to expect a controlled recovery way before the visible bounce even showed up on traditional charts. It was a calculated execution, not some panicked emotional reversal. Now, as incredible as order flow and pivot structures are, we do need a reality check. Let's head right into Section 4. Surviving with risk management. I really want you to burn this quote into your memory. Even perfect setups can fail. Let me repeat that. Even perfect setups can fail. There is absolutely no such thing as 100% accuracy in trading. Seriously, anyone who tells you otherwise is just selling you a fantasy. Real professional market education acknowledges that losses are simply a mathematical certainty of doing business. Because perfect setups can and will fail, your survival depends entirely on non-negotiable risk management rules. Professionals focus relentlessly on correct position sizing and utilizing a controlled stop loss every single time, no exceptions. But above all else, they prioritize capital projection. They completely avoid revenge trading when a setup does go south, and they actively protect their mental discipline. Consistency always has to take priority over the sheer excitement of a single trade. Which brings us perfectly to the platform that actually champions this rigorous methodology. Here's Section 5, the LeoFinWise approach. LeoFinWise was built specifically for traders who actually crave real actionable market understanding. There's no hype here, no fake promises, and absolutely zero shortcut selling. It is a highly authoritative environment dedicated entirely to daily Nifty and Bank Nifty analysis, super deep order flow breakdowns, and mastering absolute price action clarity. A massive cornerstone of this approach is the total rejection of hindsight theory. Look, pulling up a chart after the market closes and pointing out where you quote-unquote should have bought is easy, but it doesn't build real skill. LeoFinWise focuses strictly on live market sessions. Why? Well, because you can't learn to swim by just reading a book about water, right? That live environment is exactly where you learn how pros react in real time. You get to see how discipline prevents mistakes live and how true confidence is built through actual in the trenches experience. So the crucial point is how tools are actually utilized in this environment. LeoFinWise does utilize a custom buy and sell indicator, but, and this is a big but, it is strictly a supportive tool. It's designed to identify opportunities based on the structure and confirmation we've been talking about today. It is not magic. You have to understand the why behind the signal. A professional never blindly follows arrows. Instead, they use the indicator to tighten up and improve their execution discipline. Ultimately, trading success is not about finding one perfect strategy or chasing some crazy get-rich-quick scheme. The core philosophy here is rigorous but simple. Map your structure, confirm it with order flow, fiercely manage your risk, and build habits that actually last. That's the exact blueprint where true long-term consistency begins. So I leave you with the exact same question we started with at the beginning of this explainer. What is holding you back? Is it a lack of discipline? Do you have no structure? If you are just totally tired of emotional trading and you're ready to stop guessing, well, it's time to take action. Subscribe to LeoFinWise, join the live sessions, and truly immerse yourself in serious professional market education.